Good afternoon. How are we all doing? Afternoon, Joe. How are we doing? Afternoon, Road. Afternoon, Flu Valve. Interesting name. Message retracted. Message retracted. Weird. How are we all doing? It is, what is it? Wednesday. Completely forgotten what day it is today. So today we have no news again, unfortunately. So it's a no news day. We've had no news all week this week. It's been one of those weeks where it's just dead. We have had Bailey and Powell speaking, but nothing came of that yesterday. Today we've got Bullock. Probably nothing going to come of that. So it's all going to kick off possibly tomorrow, but unlikely because there's a shutdown on. Afternoon, decapped. All these new names in here today. Yeah, very weird what's going on at the moment in the US. But anyway, so there's potential for these events to happen tomorrow, 1:30, but they may not do. Other than that, we've got the unemployment change and unemployment rate overnight for Australia. I have just, afternoon ladies, I have just closed out my Aussie dollar CAD trade this morning in profit, just because obviously there's a potential for that to move the Australian dollar. I get the feeling it's going to be negative Aussie. So I'm running a back test. How many has that got to go? Oh, miles, 4 hours. Lovely. Okay. So Aussie dollar CAD, I got out of that one earlier on today. Yeah. So that was a long taken from here. It basically, I had an exit on it on Monday into propulsion, which I didn't take. So I have got out of it now today because it's a double top at propulsion and previous support. There's a probability that that might come down, but I think the Australian dollar basically is going to come down on the back of that news tomorrow. So I'm out of that. But that's it for news. It's rubbish. We've got GDP for the pound in the morning. That's forecast to be bullish. There's a possibility we might get a shock on that. They don't often get it right, the number. The average differential is 0.24. As you can see, we tend to get about a 0.2. So if you're looking for basically a 0.3 or a 0.4 differential, really, to give that any kind of impact, basically, which will give the market a decent move. So that's basically tomorrow's news, but there's nothing today. I'm not on tomorrow streaming, so obviously I'm letting you know what's going on tomorrow. Back on Friday, guess what? There's no news on Friday. It's absolutely dead this week. It's just a no news week. It's one of those annoying ones. But anyway, what's your opinion on inverse propulsion gaps? ICT call it an IFVG. I don't know. Don't know what they are. Can't comment. Don't know. I don't have an opinion on them. You know my feelings on ICT. Follow it if you want to, but nobody on the planet has ever made money with it. And if you have, brilliant. Show me your P&L. If you can't show me your P&L, not interested. So, yeah. I don't know. I don't know about IFVGs. I don't know what they are. Okay, so ranges are in for indices. 30-minute is there. Nice big whipsaw on the Dow today. So they've cleared the decks north and south. Very indecisive open. The gold has had a decent size range going. That's 15% of ADR, just over 15% of ADR. So lots of potential movement available on gold this afternoon. That's a really nice break as well. If we get a break of that short and then we break that little low there, we've got a fairly decent move downside into the low of the day, high of the day as well. We've got this big move down during London today, and then we've sat around for a while. So a retest of the high and the low potentially on the cards today on gold. Nasdaq's break too short on the 5-minute. So, yes, we'll see. Okay, long on Dow. I haven't got any of my prop accounts open. Someone at the door. There's somebody at the door. Anyway, so my prop accounts, they're all being copied from this account anyway. So I am long on the Dow. Double check that the trades have gone in. They have. Lovely. I can't remember which ones I'm trading today. Cool. Okay. So yeah, long Dow, nice clean break to the upside. So targets today on the Dow. I think we're up at, oh no, we're not up at highs. So there is your high from Friday. We've got a couple of levels coming up. Friday's high, obviously there. A little interim high there, but I would be looking more for this area up here for your next resistance to the upside. These two are kind of an area together you might want to watch. And then obviously watch this area up here. They've got that little high up the corner there as well. So that whole area there is upside resistance. So you're looking at 46,870 upside, 46,675-ish potentially today. Partial close is above that level. So if we do break long, which it looks like it's stalling a little bit, might hit some resistance before we get to those partials. No trade yet on gold, and inside bar on the Nasdaq. Just no movement, is there? Really frustrating at the moment. DAX this morning was the same. DAX break long, failed, stopped out, broke short, failed, stopped out, blah, 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 blah. Total rotation all day. So we're slightly bearish, but obviously we're in rotation. So no movement on the DAX today either. Double loss on the DAX, unfortunately, today. But yeah, we'll see where we go. Today's ADRs, you've got Aussie dollar CAD. That's the one on the screen, obviously, that I got out of this morning. So that was the trade. That was the exit. It was only 0.35 profit. It was a position trade on the H1M5, but it worked out beautifully. So I've taken that off, obviously, because we've got news tomorrow. You've got silver hitting ADR today. This, obviously, silver and gold are in the stratosphere. I have not seen a move like this on metals. In fact, I don't think I've seen a move like this on metals. The speed at which this thing has taken off for the last sort of few months, where are we now? August, September into October. So 6 weeks roughly, isn't it? Parabolic. So the market's absolutely creaming the commodities at the moment, metals. You see the biggest move that we've had really prior to this parabolic break above the highs here. I mean, that move there was big. And obviously we got the 50% retracement, which is what we always get, you would expect. Every other move you can see here has been small. Yeah. And then at least you have a 38% retracement flag break before you go. A move of this strength and this length, we haven't had it before. So it's going to be one of those years when we look back, we'll go, did your strategy survive the 2025 gold spike? Yeah. Did it survive COVID? Did it survive the 2008 crash? Yeah. Did it survive the gold spike of 2025? You know, this thing is absolutely off the charts, isn't it? Impossible to do anything with it. Go with the momentum. Made lots of money on the ORBs on gold recently because it's just not stopping. So, but when it does pull back, it's going to be a biggie, I think, because of the speed of this movement. So, origin of the move I'm calling at the lows there, which is in August. So, flag break, shallow flag break, you're looking at something around about the 23, more likely a pullback into the 24 moving average, 72 moving average. By the time it's pulled back will be around about 50% retracement. So that is assuming that we get some strength in that dollar. It's not happening at the minute, is it? So the dollar just can't really find any legs at all. It is strengthening a little bit, but you know, not really. It's very, very weird move, this gold move. Someone's making a lot of money. Someone made a lot of money short in Bitcoin, didn't they? Funny, wasn't it? What was it? 150 $150 million worth of Bitcoin or something got sold the morning Donald Trump announced that he was going to put 100% tariffs on China. Who'd have thunk something like that could have happened? as a coincidence, on the same day, he announces and crashes the market. Very weird. Anybody would think something's going on there. Anyway, so that's your only ADR today. Is silver and obviously Aussie CAD. You've got a weekly range on gold, obviously. It's already done its weekly range. So that's not surprising. So that's your low of the week. That is your high of the week. We did it basically on pretty much on Monday. There's a few other AWRs there to look at. RSI's really dead at the moment. Euro CAD is extended on the 4 hour. It's RSI 10. Wrong RSI. Reset that. RSI 10 extension for the Euro CAD. So we've pushed up very nicely. It's just starting to stall out. You've had your 15-minute reversal alert gone in on that one. There we go. So there's your reversal alert and your retest. M pattern. So yeah, potentially that one's going to be starting to make its move to the downside. But yeah, other than that, nothing on the hourlies. Very, very few new entries this week for position trading. Very quiet. Right, Dow broken upside. Gold just about to trigger long. Long gold. There we go. Long gold. Long Dow. And inside bar forming on the 10-minute range on the NASDAQ. So the 5-minute range was too small. 10-minute range is good. That's around about 18% of ADR. So we'll take a break long and short of that. Targets on the NASDAQ. Propulsion fill. So we're looking at a move up into there. Propulsion gap fill. So we're looking for a break long to test the weekly high, which is yesterday's high. If weekly high goes, we're looking to target that low just before the propulsion move that Trump did. So we're filling Trump's propulsion gap basically because he came out the next day and went, do you know what? Don't worry about China. It's all fine. It's going to be tremendous. I'm putting 100% tariffs on China. No, I'm not. Happens all the time. If you traded through Trump's last presidency, you know exactly what's going on. Anyway, so downside breaks today. We are shorting into support here. Short on the NASDAQ. So downside target would be Globex lows and that low from the sell-off at the end of session in New York yesterday. That's your first downside support. Upside resistance basically is higher day to day. I would say that is probably what we've had pre-market there is probably the resistance short. But we'll see where we go. Gold, obviously upside target, pick something. Downside, is there ever going to be a downside to gold? But yeah, upside, I am long, high the day gone. Downside targets are very difficult at the moment. There's not really much chance. This TP line here is ADR to the downside. Chances of getting an ADR to the downside, I would say, is probably quite low. You've got that little high of the session yesterday. And we're not really testing anything accurately anywhere. It's just a mess at the moment, gold. It's at all-time highs. Market can't decide what to do at all-time highs. It's a very tricky situation trading at all-time highs. But stopping out on the NASDAQ. There's a quick stop out. So NASDAQ today, no direction at all. Afternoon, everybody. I haven't said afternoon, do? What's your... I don't know. I've always talked about the IFVGs. Afternoon, Michael. Johan. You think gold and silver will pull back soon? No idea. It's impossible to tell. You know, you're asking me to predict the future. I can rub a crystal ball, but I can't tell you when it's going to pull back. This is you get these moves where it's uncharted territory. Yeah, we've not been as parabolic as this ever, really. So there's no precedent. When there's no precedent, there's no way to predict. Yeah, so all we can do as traders is look historically and go, you know what, every time it goes up there, it comes back down again. Every time it goes down there, it goes up again. Every time it hits a resistance twice and it bounces the third time, it usually tests the lower of the range. We can look back in history and pick things out that happen over and over and over and over again. Resistance, support. Yeah. All-time highs, parabolic, 6 weeks, never done it ever in the past. There is no precedent. So it is going to pull back, and it's going to pull back very strong at some point, but it's going to need a catalyst. And the catalyst in this case really has to either come from conflict and expulsion from safe haven, or from conflict, or from expulsion from safe haven, i.e. everybody goes, no trade wars anymore, conflict's all finished, let's sell the commodities off and put it into risky assets like stocks, gold will come down, or we need a massive rally in the US dollar, because this is a dollar cross at the end of the day. Yeah. So other than that, your guess is as good as mine. Keep buying it. It's one thing you can tell. You can tell a parabolic move by the candlestick formations. Yeah. So if you look at a normal chart of a normal asset that is not a commodity, for example, a forex pair. Yeah. If you look at virtually every daily candlestick that you see, you will find wicks on it. Yeah. Upside and downside. It's very rare that you get a move that doesn't have double direction. Yeah. You don't have push and pull on it. With gold, if you look at what's happening at the moment, you've got lots and lots of parabolic moves where there is no downside wick, 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 very, very tiny downside wick. Yeah. You know, there's just a lot of instances where you just had nothing but buying. Yeah. I don't know who is selling all this up here, but they're going to be in the hole, aren't they? But yeah, I don't know. You've had literally 1, 2, 3, 4, 5, 6, 7, 8 days down in the last 6 weeks. And they're not down days, are they, really? They're higher highs, higher lows. You got a lower low and a lower high there. You got a lower low and a lower high there. You got an outside bar, indecision. Then you got a lower low and a lower high. Lower low, lower high. Double top, lower low. Double top, lower low. Nothing really. There's never been 2 days where you've had definite bear, definite bear. So I think the thing to look out for is a bearish move followed by a bearish move, and then look for a pullback in it. So you're looking for that reversal alert, probably on the hourly time frame, which you're not going to get many of. You had one here. There. So you had a bearish reversal alert there. Yeah. And then it came up and retested it. There's your M pattern. That's really all you can take. Stop and try and jump on it. But I would want to see that second leg forming. I'd want to see it pull back before I decided to short that. It's just not got it at the moment. It's just not got any short. Oh my God. Okay, short NASDAQ still. Dow's completely back inside range. Gold inside range as well. Really, really non-directional open. Do you treat your evaluation accounts the same as your funded accounts? No. I reduce risk. Next week, we are covering in the MST Academy, we are doing this prop trading to actually get paid, which is 6 lessons basically. So I'm going to record these 2 videos this week and put those out on YouTube. And then these 4 are going to be basically how I trade prop. So how I manage the risk, how I use multiple accounts, strategies I use on futures, and strategies I use on CFDs. Although I have to say I don't trade much CFDs at the moment. I have 1 CFD account at the moment. Just because from a cost perspective, I can buy 50K's worth of funding at the moment for $230 instantly. $290 instantly. And I can buy 5 evaluation counts on futures for £60 each. So for me to spend £600 on 10 evaluation accounts is better business than spending $500 for 100K of CFD funding. And I can copy my accounts from CFD, which I'm doing, over to futures. So I'm focusing on futures at the moment. So we're going to go through all that next week. Might go into 2 weeks, that one, because while I've put these down as short lessons, they never are. Look at the one I did this morning. That was an hour and a half, basically, that session this morning, but it was meant to be short, but it wasn't. All of these, 45 minutes, 30 minutes, 50 minutes. I don't do short, do I? As you know, if you've been in here for any period of time. Okay, pulling back on the NASDAQ inside range. Dow pulling back outside range. Gold attempting long again. Not really any volume or follow through this morning, is there? Very quiet. Very tempted to short gold. Yeah. But wait for a signal. Wait for a signal. Right, so when you're looking at a move of this magnitude, yeah, look at how long this has taken. Don't get in on the 5-minute time frame. You will get 100 signals to go short on the 5-minute time frame over and over and over and over again. Give yourself a chance. Play a higher time frame, yeah? Look at the period of time that we've been in this like daily, yeah? So from I would say the start of this whole move from here, we've been 530 days. Yeah, 2 years, that entire move. This last move here, we're looking at 40 days. Yeah. Look at the hourly time frame for signals. When you get a signal on the hourly time frame, you're automatically going to give yourself a really nice amount of movement, somewhere between half an ADR to 1 ADR of distance for the market to really decide what it's doing. If you're getting on the 5-minute time frame, you're just going to get stopped out constantly on this massive beast that it's moving. So use higher time frames. We've taken 39 days to get there. Yeah. Let's say we only take a week to undo 50% of this. Yeah. You're looking at 5 to 7 days worth of movement. Give yourself enough room to breathe so that you don't just get continuously stopped out. It's the catch the falling knife thing. Yeah. God, look at the speed that market's coming down. People got killed on Friday. Yeah, look at the NASDAQ move on Friday. People got hammered on that. Yeah. On the hourly time frame, yeah, there was never a signal to go long. This thing never told you in any way, shape, or form you should be buying this. Yeah. 5-minute chart, you had loads of times. Yeah. It's like, oh, look, let's go long. Oh, look, let's go long. Oh, no, we stopped out again. Oh, look, it's going long. No. Hey, look, there's 3 bars there going up. Let's buy it. No. Massive bullish engulfing. Let's buy it. 5% of your account gone. Stopped out on NASDAQ. Look on an hourly time frame. Yeah, you never even got an opportunity to press the buy button. If you'd have pressed the buy button, the most bullish signal you had on Friday was a spinning top. And what is a spinning top? Indecision. Don't make trade decisions when there's indecision. You make trade decisions when the people who are on your side are coming onto your side. So that was a lower low, a lower high, absolutely no reason to buy. So same with gold right now. Yeah, give yourself a reason to get in. Flipped the other way on NASDAQ. Long. Dow's out the highs. Yeah, give yourself a reason to get in. Yeah, this look at today. Read the price action for today on the hourly chart, for example. Yeah. Inside bar. Should we go short? No. Inside bar, or rather lower low, lower high, but we closed above the open. Did we ever go below that? No. Higher high, higher low. higher high, higher low, higher high, higher low, indecision. Let's take a short. Now that could be a nice trade, but look at the size of that rejection wick. This is the last batch of sellers that tried to go short. As soon as we came in there, the buyers blew the crap out of them. Yeah, this is what this rectangle is for. It's a support rectangle. It's called a support rectangle for a reason. Yeah. Then we had an inside bar, indecision, inside bar, indecision, lower low, lower high, massive wick rejection, lower low, lower high. Sorry, not a lower low, lower high. Inside bar being painted at the moment. Higher low, lower high, indecision, support. Yeah, when that breaks and that breaks, we got sellers on board. So potentially, if this propulsion move this is a overnight candle, so I mean it is breaking a high, so it is valid propulsion, but that is what I would like to see and short that, because that is the second leg of your M pattern reversal, and that's confirmation that not only did the sellers take control, the buyers tried to take it back, and the sellers beat them twice. If the sellers beat them twice, we've got a chance. Yeah, same as we had here. Look, bang, bang, but we never got that second leg, that lower high. We never got the lower low down here. If that had gone lower low like that, that is a valid entry. That is a really safe entry. That is about 1.25 ADR. You've got 39 days of price action to unwind. Yeah, so 1.5 ADR as a stop loss. Comfortable with that. How far you've got to go. When they start to sell this off, it will happen fast. Banks and institutions are loaded on this, yeah? Every time they take a bit of profit, there's panic. It's like everybody sees their P&L drop and they're like, oh crap, we need to get out of some of this. So they sell some off. That makes it sell faster. And then other people see it and that makes it sell faster. And then eventually you'll hit an order which just buys it all up and they go, okay, we can't get out of anymore, or buy more. Yeah, at some point you'll get that structure break where the sellers will suddenly go, okay, our P&Ls have dropped enough now, get rid of it. They will dump it en masse. And it's the old climbing up the stairs, falling down the elevator shaft. Within 3 days, you'll have 50% of that move wiped off. But you need a catalyst. So you need some kind of price action that says, yeah, this looks like it's happening. And you might get stopped out on it a couple of times, like yesterday. That looked yesterday like it was starting to go. Didn't they? Did it? Wait. 1700. Okay, so there's your first upside resistance. I'm just contemplating taking a partial. We'll watch what price action does at this level. Afternoon was check. That silver looks like an M pattern. Yep. So silver's already gone. So on the hourly time frame, you look at silver and you look at gold. Silver actually broke yesterday and has not made a new high. So when you think divergence, yeah. So when you've got correlated instruments like gold and silver, what you're looking for is divergence. Yeah. So gold and silver on a daily time frame are 63% correlated at the moment. Low time frames, as you go down, more correlated, 79%. Hourly, 71%. So you would expect 71% of the time for them to move in sync with each other. Yeah, they're correlated. So when you see a lower high going in, yeah, so we got a higher high, higher high, got a low, you got a lower high potentially going in, M pattern here. And then you look at gold and what gold is doing, making a higher high and a higher low potentially. There's divergence. Silver is not going to come down without gold. So either silver is a fake out and it's going to make a new high, or gold is going to struggle and break, and silver will be the leader. It's the same as the NASDAQ and the S&P. One of them goes, the other one follows. They don't necessarily go at the same time. You get them diversify, they diverge, and then they come back in to sync again. So what you're looking for on lower time frames, like 30-minute and 50-minute charts, is you're looking for them to get more and more out of sync. So if on a daily basis, they are 63% correlated, on a 4-hour basis, they're 80% correlated. These are correlated somewhere between 60 to 80% of the time. If you drop down to a 15-minute time frame, which we've got at the moment, and you see they are 33% correlated, something's out of whack. One of these is in charge. The problem is, because markets are binary, you don't know which one it is. So after a parabolic move like this, silver could be leading, but silver could be lagging also. Yeah. So you either want to be looking for longs on silver or shorts on gold. Either way, wait for price action. Yeah. Silver's price action is not telling you, gold's price action is not telling you to go short yet. Silver's price action is not really telling you to go long yet, is it? Doing anything, is it? We're actually in propulsion, and they are selling propulsion, which means that the guys that sold here are adding more size. So if this breaks down and starts to do that, that's your M pattern reversal. And we've got the same story here on the daily chart. Yeah, it's parabolic for 6 weeks. This is going to do the same thing. Markets are on the move. Dow is about to hit target. Oh, it's not, is it? I'm going to take a partial on this. If this doesn't close above that high, we've got 1 minute. If it don't close above that high, I'm going to take a partial. I'm literally 1700 is partial TP, and I'm 1400. So the only reason I'm doing this manually is because I've got 2 futures accounts trading off the back of this. So make sure I take the money. Now we're going to close high, aren't we? Taking a partial. I've got too much on to not take a partial. Okay, so the others are moving as well. So the NASDAQ, we're broken out the highs. So watch those upside targets on the NAS. Oh, we've beaten it already. Okay, so there's your high of the week gone. So that's the high of the week done. Next upside target is that downside before the drop on Friday. So that is your session low in New York before Trump decided to do that. So watch that area, watch the origin of Trump's move. We covered this in today's lessons, didn't we? Yeah, we are on a return to origin path here, aren't we? So, but that was your upside resistance, which is now potentially gone. Has gone. So upside's free for nice distance. So that's next support, and then obviously off from there. And gold, obviously, we're out we've just discussed gold in depth, this could go absolutely anywhere. It makes total sense to have a partial at the high of the day rather than above the high of the day. But this is gold. It hasn't stopped for months. Afternoon, Mimo. Good breaks. Anybody got any other pairs they want to look at? Besant is speaking at the moment. Just be aware. Possibility of longer China tariff truce. Okay, so that will unwind the market and put risk on, which will make the stock markets pop. We've got Moran speaking at the moment as well. So just be aware, we've got a talking head talking, which is what talking heads tend to do. Novak is talking as well. Russia cuts fuel import duty to 0. Interesting. Russia trying to rally oil. So oil we looked at, while we're looking at oil and talking about oil, we looked at this $60 a barrel area. And this is where the market stagnates. Yeah. So it's very difficult for oil producing nations to make money below $60 a barrel. They still make a lot of money below $60 a barrel, believe me. But from a normal perspective, economically, they don't make anywhere near as much. So they try to keep that cap at $60 a barrel. US does the same, although Trump has removed that a little bit more since he's come in and started tariff wars. But we're in this really uncomfortable point where you start to think about OPEC getting involved. Partial close just taken on the Dow. There we go. So that was the real partial. That was my partial. That was the real partial. Got taken just up there. So we're now into trailing stop territory. So yeah, we're in this really uncomfortable. So again, there's a really nice opportunity for a long on oil. If you go back and look on a daily chart, yeah, we have been down there, obviously, COVID, yeah. But you look at that area there. This is where we are cheap, $60 a barrel. We had COVID and obviously we recovered. When we bounce down into the 60 areas, the 65 areas, the market tends to rally away from it. We had this point here where for the first time in 5 years, basically we dipped below 60, popped back up again, dipped below 60, popped back up again, started a rally, Israel and other stuff. So it's at this area where we are always uncomfortable trading with oil. These are your 5-year lows here, which is 225 ADR away. So it's within reach this week. But that is $55 a barrel. If that got to $55 a barrel, that's a really good buy. Obviously, just historically looking on the chart at what happens when we get down to those sorts of areas. So that is what I've got marked on the chart there, $60 a barrel. And that is your low, which is 54.50, 55. So $55 to $60 a barrel is your area where we just don't like being. The market doesn't like being below that area, and we're banging that zone at the moment. So you've got roughly a 3 ADR stop on any kind of bullish signal from here, and your upside is, I mean, the oil demand is actually increasing, apparently. I was reading this morning, oil demand and gas demand is actually globally increasing rather than reducing, which is what we thought was going to happen with electric cars and everything that's happening. NASDAQ is blasting out the highs. So if that is the case, we need more of it, and supply is restricted, which it is at the moment. That will drive prices up anyway. So if we are to believe what OPEC and everybody is saying about oil. I think it was about 15 million barrels a day extra is the forecast for the coming 12 months, which means more supply, more demand. Supply remains restricted, prices go up. Standard supply demand stuff, which is what all commodities work on. So looks like a good area. I don't trade it myself, but if you are a swing trader or a long-term trader, that is a nice area historically, assuming Trump doesn't blow anything up, which is also a possibility. US dollar majors analysis. What strategy are you trading? Go to the members website. Yeah. Go into fundamental analysis. Go into AI analysis. Read all of that. There's your analysis. I'll stick a link in chat. It's all free. Doesn't cost anything. Okay, slight pullback starting on NASDAQ. I'm going to take one off manually. Just because I can. I'm also going to take one off of gold. No, I'm not. Gold's parabolic. Look at it. It's not stopping. We're going all-time highs, aren't we? Again, for the second time today. Madness. So we've got a weak dollar at the moment. Very choppy CAD. Okay, Dow's pulling back. So watch this area here for buyers. New leg up. Nasdaq's rejecting those highs. And gold is just started to slip back a little bit. I'm going to take one off. Taking one off gold as well. Okay. So looking for a pullback as potential for a flag break on oil, on gold. So we've got propulsion gap here, which is the break of that high. So that'd be a good area for adding. We've also got this break that we've just put in now here, which we might just sort of flag down into and then use as a leg up into those highs. Good moves today. If only the DAX had done the same thing this morning, it would be a absolute clean sweep today. So that move there, we're looking at 9,000. 900. Yes. ADR is 787. Wow. Okay, so that's 9,000 that move in a month and a half. If you measure the biggest move we've had recently, that was 550 in about 2 to 3 weeks. We had this parabolic move in 2 months, which was 4,000 pips. We had a big parabolic move there, which was 2,000. Yeah. That's probably the biggest move we've had, look. So there, we're looking at 29,200 measuring that move, yeah? So that's probably the biggest move we've had with a 50% retracement on it. 2-month move there, which is 23. 2-3 week move there, 28,000, yeah? 90,000. Yeah, this is 3 times bigger than any move we've seen on gold. COVID, obviously, if you look at the size of the COVID drop in comparison, it's 26,000. Yeah, it's 3 times bigger than the COVID drop. It's just this is just absolutely unparalleled, this. And it will all be in relation. So it doesn't matter how much it's moved. What it's going to do is retrace 30 to 58% of that move, because the mathematics are the same. Doesn't matter how far you move, the mathematics on pullbacks are mathematics. It's 30, 50, 61, 8, 23. Always does the same thing, something around about. So you can see how much opportunity there is on this when it goes, but just not giving up anything, is it? Really good opportunity. Did I change the ADR from 10 to 3? No, because we didn't have any pullback. We didn't have any continuation on that move. So if the only reason I'll ever change ADR is if we get a similar move. So if we get the, like a Trump move, yeah, and then we get another Trump move, or we get another Trump move which is the same as that to the downside. If we get 2 or 3 days like that, then I will adjust. But we didn't. What we did was we went straight back to normal trading. Normal trading, parabolic move, normal trading. I mean, yes, yesterday was parabolic in that it basically just undid that move, didn't it? On the Dow, anyway. But look at the speed of the Dow, the size of that movement on the Dow. Then look at the NASDAQ. Yeah, the NASDAQ's move was nowhere near as big. We actually put in a low rather than the Dow putting in a high. So the NASDAQ's off up to here today, probably. But there's not enough movement here. We got an ADR that was 225, 250 ADR, I think it was. What's ADR? I don't know what ADR is at the moment on it. So yeah, it's not enough movement for me to warrant changing it. So we're currently sitting at 375 ADR. That day was 1,000. So it's 300%. That was a 300 ADR move. Yeah, but normally, we're putting in 300 odd there. We put in 600 there. But a normal day, 300, 220, 230, 280, 330. Yeah, so apart from that one day, we're kind of normalish. But if that day is like that, that day is like that, the next day is like that, yes, I'm expecting more of those types of days. So I dropped to ADR 3 because I want to measure movement based on what we're doing here, not what we've done here. But, the one anomaly does not upset a 10-day ADR enough. Yeah, this is like a news event, isn't it? It's a bigger than a news event. Normally a news event will do 200 ADR, sometimes more, but it's just one-off. And all we're doing is we're gradually and slowly retracing that move back up to origin because it's not real. It's a Trump. It's a, hey guys, If I was you, I'd sell all your NASDAQ stocks. Why? Trust me. China tariffs. Hey guys, you know you sold all those NASDAQ stocks? Buy them back. No, I won't bother them actually. I'm not saying that's what happens, but coincidentally, it's only happened, what, 3 times since he's come into office? Did it happen in Biden's reign? No. Did it happen in his previous reign? All the bloody time. Has it happened in other presidents' reigns? No. Have we got a corrupt criminal in charge of America? Apparently so, according to criminal law in America. Would you expect this to move normally? No. I don't know. I know nothing about law. But what I do know is the market moves like this when Trump's in charge. So what can you do? We are stalling out on the NASDAQ up at those highs. So indecision forming. It'd be nice to see a bit of a pullback on this. Just give it a bit of strength, but if it wants to go, let it go. Gold, nice rejection on the pullback. So there's your pullback into previous resistance. Now support up into resistance. And then obviously if we get out of this high, we're off. All-time highs. Did you change? I've answered that. Gosh, gold is insane. It is insane. This is why I don't trade it normally, because it does things like this. Not to this extent, but it does things like this. It just takes off. Do you find indices ORB trading more exciting versus position trading? It's not more exciting. It's different. I don't think it's more exciting. It's a different style of trading. It's a different time frame. It's scalping. It's not long-term trading. I'm never going to make 5% doing this each month. I'm going to make way more than 5% doing this, but I'm also going to lose bigger than 5% when it goes wrong. With position trading, normally, I mean, I'm up 6.5% this month on the position trading account. Nothing to write home about, but it's consistently 6, 10, 15% a month with very little risk. This is high risk, isn't it? So, you know, I'm sitting here watching my futures P&L sitting at $400. It can easily go to negative $400 within 10 or 15 minutes. Totally different. If you call that exciting, yes, it's exciting. I call it risky and nerve-wracking, which is what trading is. Someone always said to me, this is, loads of people have said this, but my mentor said to me, if you're comfortable, you're not doing it right. Yeah, because you shouldn't be comfortable with a load of money on the table. And if you've got enough money on the table to make money with, you should be uncomfortable with that risk. But from a position trading perspective, the guy that taught me DCA strategies, he basically said, if you're uncomfortable, you're over leveraged. Yeah, and that's true of position trading. So if you're position trading, you should never be uncomfortable, really, because if you're, and I mean, I'm not going to use gold as an example. Let's use anything but gold as an example. So if you're getting into a position here and you short it, and it doesn't come down enough for you to take profit, and it pushes up, and you short it again, and it pushes down not enough, and you pushes up, and you short it again. By the time you've shorted it 3 times, you should not be uncomfortable. If you're uncomfortable, you're over leveraged. You've got too much risk on, because you should be prepared to take 6 to 8 trades in a squeeze, maybe even more sometimes, although you're probably scared out of it. But you should be totally comfortable in 3 to 4 positions, sitting in 1 to 2% of drawdown. If you're sitting in 5 to 10% of drawdown after 3 or 4 positions, that's uncomfortable. That's over leveraged. In futures and indices trading, you should be uncomfortable the moment that breaks. As soon as it gets up to any type of resistance, you should be going, oh crap, there's a lot of money on the table. Because in futures and in prop specifically, you have to have high risk on, because they're asking you to 10 times your normal risk. Yeah. When you take out a prop evaluation and they give you $50,000, what they're actually giving you normally is somewhere between $2,000 to $3,000 of drawdown to play with. So for you to achieve a target of 3,000, using 3,000, you have to 100% that account to pass the evaluation. If you risk 1% on that evaluation, you're never going to pass. So you have to 10 times your risk. Yeah, I'm taking $250 risks on a 50K account. Yeah, which is 10% of my daily loss allowance. That's high risk. I'm uncomfortable with that because it's 10 times more uncomfortable than I am with my own capital. Trading my own capital, I don't use 10% risk. I use 1% risk or 0.5% risk. Certainly not 10%, but that's what you got to do in prop. Different thing. So yes, it's more exciting, but more rewarding, but also you will lose a lot more. When you have a period in, when you're trading ORB, when you have a period like that, and the EA basically stops out, like DAX this morning, perfect example, DAX this morning. Yeah, so yesterday, lovely clean break long, target, exit. Today, break long, stop out. Break short, it's not plotted on the chart, but there's a trade there as well. Stop out. So there's 2 stop outs there. If the US indices this afternoon had gone into rotation, I would be going stop out on the Dow, stop out on the Dow, stop out on the NASDAQ, stop out on the NASDAQ. Gold might have gone and paid for that and paid for half of that, but I'd still be down 3R on the day. If R is 10% of your account in prop, you're down 30%. Scary. Fun. This is part of what I cover in the MST Academy. In this part, choose the right time frame for you. Yeah, finding your time frame. What can you trade? Different people are different. Yeah. You'll have 10 people, you'll give them exactly the same strategy. 2 of them will run with it and make a fortune. 8 of them will blow their account constantly because it's not the right time frame. It's not the right strategy. You'll give the same strategy to the same 10 people, but you'll up it to the hourly time frame. Those 2 guys that milked it on the 5-minute time frame will suddenly blow it all the time. The guys that were killing it or dying on the 5-minute time frame, those 8 will suddenly become profitable on the hourly time frame because the hourly time frame is right for them, because the speed of movement and the speed at which money is accumulated and lost is different for everybody's different psychologies. So you can't pick what is the right time frame or strategy for you until you've tried them all. But whether you classify it as exciting, worrying, or whatever adjective you use to describe what is going on, you've got to find the one that clicks with you. Yeah, and you will find something that clicks. This is what happens in trading. You try lots of different stuff, and all of a sudden you'll be like, that makes sense. But it only makes sense because the stuff that you've done before wasn't right for you, and this is right for you. So it makes sense to your brain, and all of a sudden you're like, I get this, I understand this. Support and resistance is probably the one thing that most people click with because it's so easy. Yeah, you see price move up and you see it pull away. You draw a line on the chart, you stick a zone around it, and when price gets back into that zone, you sell it. Really, really easy. It works on all time frames, but it works better on that time frame, that time frame, and that time frame than it does on that time frame and that time frame. So you'll try support and resistance, you'll build an EA, you'll trade with an EA, and it will go like this and it will drive you mad and it won't work. And then you'll suddenly flick there and you'll suddenly make money and you'll be like, and it won't be because you've changed strategy, it's because you've changed time frame. Yeah, because low time frames require high risk and you lose money faster. Don't forget, when you go here and in here, yeah, if you are trading with a 10,000 account with 1% risk, yeah, and all of a sudden you have a losing run, yeah, however many trades that may be, you need to make it profitable, don't I? Yeah, that is going to drive you mad. You're going to lose 7 trades in a row. Actually, you're going to have 1 in the middle that works, and then you're going to lose another 7. Then you're going to have 1 in the middle that works, and you're going to lose another 3. So in total there, you've probably lost, what, 16 trades? Yeah, 1, 2, 3, 4, 5, 6, 7. 1 win. 8, 9, 10, 11, 12, 13, 14. 1 win. 15, 16, 17. 17 losing trades in a row. This thing made $1,900 profit over 100 trades. Yeah, but you have to survive that. On a 5-minute time frame, that is going to happen all the time because you are trading algorithmic chop, and it is going to give you so many false signals, you are just going to get killed on a regular basis. But the next time you do it on a higher time frame, all of a sudden, you'll only have 5 losing trades. Yeah, and those 5 losing trades will be followed by 6 winners. 5 losing trades by 2 winners, 1 loser, 2 winners, 4 losers, 4 winners. And what's happened is from that peak to that peak, you've only gone down that much, not gone down that much, because higher time frames are more reliable signals. Exciting, scary, lose a lot. Not exciting and scary and not losing a lot because everything happens slower. Everything slows down. Therefore, your number of trades slows down. Your risk slows down. Everything slows down. Everything becomes clearer. Exciting. It's really exciting sitting there watching a P&L sitting at $340. Yeah. We've only been trading for like an hour. On an hourly chart, I haven't even done a candlestick yet. So there's no way I'm in $340 of profit, is there? I might be in $34 of profit. But this is going to work more. Very different time frames, different, these lessons. The reason I put these lessons up here free on, because this is your bedrock. This is what you need to know. And then you're going to go into, right, how does this market work? And then you're going to pick whether you want to trade a different type of strategy. I'm going to do 3 different types of strategy. And that's it. That's all you need to know, isn't it? There is only 3 strategies. We've covered that. There. Oh, I didn't realize. I forgot. I put a little blue tick. If you've watched a video now, it puts a little blue tick there. We don't seem to be going anywhere much on the DAX. We're stalling out a little bit everywhere at the minute. Nasdaq's at new highs. So close. I really think this is probably going to carry on going, but there's nowhere for it to go, is there, really? There's literally nowhere for it to go. That's your only risk here, which is still above the partial. So I'm going to let that run. Gold's pulling back. So that pullback a little bit stronger than potentially it could have been. So is this start of that M pattern reversal? Inquiring minds want to know. I only have Posier, but seems there's a lot more action on ORB. Yeah. Yeah, so they're totally different strategies. If you go and, I don't know if you're a pro member or not, but if you watch all of these, yeah, this is the bedrock of all traders. Everybody needs to know what's in these 16 videos, 19 videos, yeah. So there's 9, well, not videos, they're lessons. Yeah, they're roughly an hour long, all of them, half an hour to an hour, hour and a half, the odd one. But everything you need to know about all strategies is covered in here. So this is this covers every strategy. Whenever you pick up any strategy on YouTube, a PDF, a document you found from 10 years ago, your mates told you about something, whatever, the idea of all of these videos is for you to go and look at that strategy and go, that's a mean reversion strategy, and the strike rate's too low for it to be positive risk reward long-term edge. You'll know that because you've watched all of this, because the market only does 2 things. It goes up and down and moves through time. When you understand that that's all the market does, you understand that there's only 3 strategies that you can possibly trade. Yeah. There's only 3 things you can possibly ever do in trading. Yeah. It's 3 strategies. And when you understand the 3 strategies and what the edge of each of those strategies is, you can pick up any strategy, apply it to any time frame, and identify whether it's got long-term potential based on what that strategy does. So if you see a strategy where the guy basically does an Asian range breakout, and what he does is wait for it to come out of the highs and buy, yeah, if that is his strategy, and you identify that every time he shows you a screenshot of a trade, it's only ever the trades that don't have resistance in the way, you'll know why that strategy works and why it won't work if you were to automate it. But when you understand what price is doing there, you'll know that it is either got an edge or it hasn't got an edge, which you can then either automate and test, or you can trade manually and verify for yourself. But every strategy falls into standard blocks, if you like. And all of this stuff is designed to tell you how it works. And then you can do what you like. Gold's putting back into secondary support. So this is what worries me about gold today. Not worries me for this trade, but long term. We today put in a very, very swift move down, and we haven't managed to get back up there. If you look at all the previous days on gold, yeah, whenever we've pulled back, apart from that other day, yesterday, we have pulled back and we've immediately gone out and made a new high. Yeah. This is kind of the first day, actually there's another day there, but this is the kind of the first day where you haven't actually got that continuation, if you like. So looking at it on a higher time frame, this could be it, couldn't it? In which case I don't really want to be in my gold long. And I'm not. It could well bounce from here, but I'm not going to take the risk. Yeah, we're not getting out, are we, here? Fire and skill. I totally agree. I've opened my first prop account. I'm having to risk 5% per trade, otherwise would be consistently stopped out. I normally risk 0.5 to 1%. Totally outside my comfort zone, yeah. Afternoon plowman? Yeah, you will be. Because you're trading something that's not normal. Prop's not normal. That's why these two videos that I'm going to do, I'm hopefully going to get both of these done tomorrow, which will just be stuck up on YouTube. But when you understand how they work, what their profit mechanisms are in prop, you'll understand why they have the rules they have, yeah? And, you know, I've just kind of proven why they have those rules in place. It doesn't matter how profitable your strategy is, yeah? Yeah. Massive return. Yeah, this is a 10 grand account. Over 100 trades. We've made a 62% gain on the account. Yeah, huge. But what is in there? A blown account, a blown account, a blown account. Yeah, in three times you've blown that account. Beautiful return. So it's going to be the same return every time, exactly the same. We've got the same win rate, same risk reward, same risk. It's always going to return the same amount of money, but it's going to blow your account. It's going to blow your account. It's going to blow your account. Lucky. Yeah. Evaluation passed, stage 1. Evaluation passed, stage 2. Payout, blown account. Didn't get paid. Why not? Because they've asked you to go through 3 stages of doubling an account. You got to be really bloody good or really bloody lucky to do that. Yeah, which is why I buy instant funded accounts, because I can run 3 or 4 instant funded accounts on different days with different strategies, and one of them is going to work. Simple. Yeah. Not bad there. Probably blew the account there. Survived that. That would have been probably a double payout. Probably blown. Yeah, but if you use the prop firm calculator, that actually does the exact prop firm rules that, you know, and you can run multiple simulations on this. This is a much better way of doing it. So drop your strike rate down, drop your risk reward ratio down, run an analysis, tells you how many times you're going to pass and fail based on statistical analysis, basically the maths. Yeah. So, you know, if you're risking 2% a trade, yeah, you are going to blow a lot more of these than you will pass. Yeah, so if you just drop that down to 1%, which obviously is not really 1%, but and up your, strike rate on prop is you're going to be scared. You're not going to get much higher than 40% most people, but that's enough to pass. Yeah, a number of them. Don't forget what I said at the beginning of the stream. I can spend £600 right now and get 10 evaluations with a prop firm, with multiple prop firms. Yeah, 10 evaluations. If I fail half of them and pass half of them, or pass a third of them, I've got 3 accounts over the line. If they're 50k accounts, I've suddenly got 150 grand's worth of funding. Now, if I drop my risk down to a reasonable level and run that simulation again, assuming that these are funded accounts I've just achieved, I'm never going to be blowing. Never blowing. Never blowing. Never blowing. I keep the accounts. Never, ever, 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 ever blow it. Oh, I blew one there. I did blow one there. Yeah, you will blow them because the laws of averages mean that you will get a run where it just look. The day you get funded, that happens. How many times has that happened to you? Happens all the time. It's normal. It's totally normal. When you understand the mechanics of risk reward and the mechanics of distribution of winning and losing trades, you are never going to distribute your trades evenly. You are always going to have negative distribution, which is going to blow your account. That is their edge. This is the house always wins. This is the casino. Always. There's ways to beat them. I started these evaluations yesterday too. Actually, I started one yesterday, and today is the first day of the second one. Tomorrow will be the first day of the third one, etc., etc. But this account's up to 51.5 now in 2 days. That account is not traded yet. That account, this is started today, this one, up 600 today. Not closed yet. I've got 200 running open, but 400 closed. Yeah. It's just trading ORB. Literally just trading ORB. Wrong decision on gold there, look, potentially. But it's all about the maths. When you understand the maths of what is happening, this is what this is built for. Teach you the maths. Do your own maths, yeah? Set your maximum loss limits, set your profit targets, set the actual account balance, set your current balance in an evaluation. If you're in a evaluation and you're up 1.5 grand and you've been trading for 2 days and you want to pass in the next 5 days, run simulations. You're not going to pass with that. So what about if you risk a bit more? You're going to pass? Yes, you're going to pass. No, I'm not going to pass that time. What if I went for a 1.1 to 2.25 risk reward ratio? Yeah, how many of those am I going to pass? You're not going to fail any. You won't have passed half of them, but you will have passed half of them. You might fail one, but you're going to pass the majority. Fail, pass the majority. It's all about the maths. It's all that is. Trading is mathematics, isn't it? It's a binary market. There's a binary outcome. It's a yes, no. It's an up, down. It's all it does. So if you apply maths to something binary, you will always get an equation that you can make positive or negative by using statistics. All it is. Very simple when you stop looking for the Holy Grail indicator. But unfortunately, that's where we spend 99% of our lives, isn't it? Hey, it's in this new indicator. It's got a 75% strike rate. It's called the Market Reversal Alerts Indicator. And what it does is it draws orange boxes on the chart every time there's a structure break. It's the Holy Grail of trading. Look at the signal it gave you there. Make sure you get Agimat on the list. Agimat's always a goodie. I found it the other day. Look, Brian, I'll show you my folder. I'll show you my folder. That sounds weird, doesn't it? No, it doesn't. I was going through my old stuff, and there he is, look. Agimat Scanner 2018, the Agimat Scanner 2020 by Uncle Lee. He's even got my name. The whole lot. Agimat. None of this will work anymore because the coding's changed so much since I had this. But yeah, I found it. Agimat. I was literally looking through folders the other day and I was like, I've got Agimat. If you don't know what Agimat is, go and look it up. But please don't spend any time on it at all, ever. Do not buy it. Seems YouTube has switched to slow outslur usernames instead of actual names. Yeah, I noticed that. Everybody has an ampersand for some reason. Don't know why. It's not something I've done. So. Final skill. Been thinking if prop pays funded traders from new challenges, even if you take small regular amount of profit when passed, they will eventually want you gone as it's consistent draw on their profits. Doesn't make any difference. If you could get, you can get consistent payouts, but not from the same account. And that is the key. Yeah. You're not going to get paid regularly from the same account. That is the lock, if you like, the key rather. But they won't kick you out for being for drawing regular payments because they make 15 million a month in evaluation. Yeah, and even if every single month you and 10 of your mates took 5k payments out of that 15 million, you are not going to touch the sides. They are a market maker, you are a retail trader. Yeah. Go and ask any bank or institution, walk into any bank or institution, go up to the market maker desk and ask any of those guys sitting on those desks if they have any clue where retail money sits in the market. They won't even know what you're talking about. Most people come out of banks and institutions and don't know retail trading exists. We are a piece of poo from a fly on the bottom of a shoe that is being worn by someone in a bank. Yeah, in this case, it's a prop firm. Don't exist. They don't care. What they have at the end of the month, yeah, is, or the end of every time a payment request comes in, they go, how much payment requests have we got today? And they'll go, we've got 37k. Yeah, from 125 traders or 225 traders. The numbers are relevant. The numbers are totally irrelevant. They'll go, how much have we made today? And they'll go 1.1 million. And they go, no problem, just pay those guys. We'll just pocket that 750k. Even come into the equation. The first time I put a payment request in for 2k plus, my first payments I've ever taken were tiny because I wanted to test it worked. Same as a broker, yeah? We all did this when we were small, young traders. We set up an account, we put 1,000 in there, we made $50 or £50 and we went, I'm going to draw that out because I want to make sure I can get my money back. Yeah. And you get the payment out and you're like, oh, this is real. First time I did it with prop, I was like, first time I got to pay, and that it was 2 weeks I had to wait until I got my first payment on prop. So I traded it up and then I traded micro contracts just to get the days in. And then I drew out that, I think it was $250. Something like that, tiny amount. But I got paid and I was like, this is real. First time I took a 2.5k payment, I was like, this is really real. And then you get used to taking those types of payments, but you also get used to giving half of it back, if not a little bit more, because you have to spend loads of money on loads of evaluations to get over the line, to get the funded account that you don't blow by the time you get to the payment date, which is why they all have 5, 8, or 14-day payment windows, because they know you're going to do that with your P&L, and then you're going to do that. And if that is your drawdown, you never get that payment out of your account. I'll keep going back to this until I'm blue in the face, but that's your P&L. Evaluation, tick. Stage 2, tick. Funded account, excellent. I need to get to there to get paid because they've put a 2-week limit on it. So all I've got to do is hold the account for 2 weeks. Didn't get to 2 weeks. And this is why I love Take Profit Trader. If I make $500 day one funded, I go, can I have $500 please? And they go, no problem, sir. Pay you. Because that is going to happen every time. Doesn't matter if it makes 2.5 grand. You will have that, that, and that. And all three of those are the end of your funded account or your evaluation. It doesn't matter how many simulations you run, those peaks and those troughs will be there. Look at that. That you gave up on ORB. And then you came back 6 weeks later and you went, I'll have another crack at ORB. Oh, shit, it doesn't work. But you missed that and you didn't get that because you didn't understand that. Very important. Prop firms are the zero on the roulette wheel. Yes, that's a good way of putting it. And they have the house edge, and this is the house edge. This is the house edge. There is not a trading strategy on the planet that does not have that. Yeah. If you look at a strategy with a 60 to 70% strike rate, you are not getting a 1 to 2 risk reward. Not going to happen. You're going to be getting a 1.25 to a 1.5, maybe. Yeah. If you can find a strategy that has a strike rate that high, you are going to milk it and prop. But that isn't possible. It just doesn't exist. Yeah. So 90% of strategies you find out there are going to be something like that, or they're going to be something like that. But all of those types of strategies that fall into the norm, think bell curve. Yeah, this is where everything works. This is where the anomalies lie. Don't work consistently, works all the time. They're all going to be falling within that 40 to 60% strike rate. And every single one of those strategies has an Achilles heel. And it's called longest losing streak. Every prop firm knows this. Because it's done this. It's done these simulations. It knows. They sit there and they press this button and they go, look at them. They don't know. They just don't know it's happening. They think they're really good. And then all of a sudden mathematics trips them up and they don't understand it. That's what they do. I wish I worked in a prop firm. It'd be so much fun. But they can't tell you, can they? Because obviously they go bust. I was reading about a guy who is consistently profitable. All of a sudden, the prop firm has stopped paying. He has supplied all info, but now they are ghosting him. Change prop firm. It's not as if there aren't 1,000 out there. Rules are the same. Costs are virtually the same. Who is the prop firm, though? I can guarantee you it isn't one of the big ones. If it is one of the big ones, if I was him, I'd make myself known. Start a YouTube channel and a website basically called XYZ Prop Firm Doesn't Pay. Here's all the proof. They will soon go, I'm really sorry. Would you like a real funded account? Because otherwise they go bankrupt. So small prop firms, you don't trade with them. Trade with the ones in my Discord group. I've got discount codes for prop firms. There's 5 in there. 4 actually. There's only 4. Trade with Top Step as well. Top Step are great. But Lucid, Top Step, Take Profit. There's loads of goodies. That's finished quick. Thought that was going to take 6 hours. It took an hour. There you go. There's a prop beta. $1,700 drawdown, 8,300 profit. 1,600 drawdown, 6,700 profit. Lovely profit factors. Look at that. This might be what we're covering on Friday in the member stream, by the way. This is a breakout strategy that uses turtle trading mathematics to scale into trades. Basically, it won't have a high strike rate, but it has these huge wins. Huge wins. These are passes, basically. Yeah. So what we're looking to do is we're looking to minimize losses and get big ones that just pass evaluations. You get your stop loss to break even really quick, and then you lock in the profit, and you just let the thing run as far as you can. Days like we've had recently, like that, it just will clean up. Like 5%, 3% per day when it works. But I've been developing this for a while, but it's been trying to get a way to trade it in prop, because a lot of prop firms won't let you add to losers. And obviously with futures specifically, which is what I trade a lot of now, you can't DCA in and out because obviously it's first in, first out. So I need a strategy where I only add on positive movement, which is what this does. It's the old turtle strategy, but a variation of it. So yeah, it's but you know, like I just said, it's going to have periods where it just doesn't work. Yeah, it's a breakout strategy. Market does that, ain't going to work. You're going to lose. But it suddenly then starts to make tons and tons of money like that. Yeah. So imagine this being day 1 evaluation, day 2 evaluation, day 3 evaluation, day 4 evaluation. Imagine that being day 1 evaluation. Yeah. Big gains. That's locked in 4.9% profit. I don't know what that was, but it was big enough, wasn't it? Yeah. It's a great little strategy, but it is gonna fail. It's gonna fail. But this is what my whole thing I'm going to teach about, is how to use strategy and multiple accounts to pass. Basically, keys to cycle accounts for longevity. Yes, exactly. Ignore the 10 bar high and low. It's this is as we call it in the coding world, a development version. So you leave everything in line. You leave everything on the. You just fix what you need to fix, and you leave everything else you don't want until the end, and then you remove it all at the end. So there's a shed load of code in here. It doesn't have 2 TPs. It's got 2 TPs in there, but it hasn't got 2 TPs. It's got a load of crap in here that's just wrong. There you go. Look, 1.6, 3.3, 4% we got that day. One trade, 4%. Yeah. Valuation targets at 8. Yeah, this day. And again, this is running unlimited targeting. Yeah, to a certain extent. So if you have a 4% day followed by a 3% day, the next day, as soon as you get to 1%, you bank it. You're done. That's it. You're passed. Yeah. So where this is having a load of losses, those losses won't necessarily reflect in real trading, because you'll be taking that off, because, you know, it's sitting up here at 5% profit, 6% profit. There you go. That's an evaluation done in a day, isn't it, really? 2.4% banked, the rest of it taken out at a profit. Didn't see what it was, but these are the days. But it's a breakout strategy. Breakout strategies only work with volatility. Breakout strategies do not work in rotation. So run 3 accounts with breakout strategies, run 3 accounts with rotational strategies, mean reversion. Whatever the market does, you're going to make money. Hopefully. Right, so NASDAQ, we are still holding long. I'm just going to protect that with a break even, because we are absolutely stalled out. Not far away from partial, but I'm not going to take a loss. Dow is about to stop out on the second half. So I've already taken 3/4 off. We're stopping out in the second half. Gold, I've closed out because we just are unable to make new ground. So I was expecting a pullback continuation or a test of those highs. We've got neither. So not doing anything more on that one. There you go, done for the day. Apex traders, one of the biggest. Apex are terrible. Brian's not going to like me because Brian, I think, do you still trade with Apex, Brian? I know you used to. Good. Yeah, Apex might be one of the biggest, but they're not the best. They never have been. They are terrible. I used to trade with Apex. I was funded with Apex and I stopped because they would not pay. Yeah. The problem with Apex is you have to wait a long time to get paid. And then when you get there, you have to have hit a target which you have to exceeded by a substantial amount for them to pay you, and they'll only pay you 50%. Yeah. So by the time you take your full payment, yeah, you have to have had the account for such a long time. That will happen. Yeah. They're not good. Apex never had a great reputation as far as I'm concerned, but stick with the ones that. The trouble with Apex is, right, and you'll find this, some of these prop firms, they will give away evaluations for next to nothing. Yeah, I don't know what their current offer is, but it's probably 80% off. There you go. 80% off, right? So what they're doing is they're giving away the accounts for virtually no money whatsoever. But their idea is they do it en masse. They get thousands of people doing these evaluations. Some people get lucky. Yeah. So they put rules in place to stop the lucky ones getting paid. Yeah. But they don't make enough money. And this is where Apex, I think, personally are going wrong. If they were charging normal rates for their evaluations, they would have enough money to pay all their traders. What happens is when your P&L goes like that because you have too many payouts requested and not enough evaluations bought at a cost that generates enough pot for you to pay, you have to stop paying some people. Yeah. And it's typically the bigger ones, unfortunately, the guys who are doing it properly, that are the ones that get stung. Not great. They've recently upgraded their website, make it posher. But look at this, right? This whole system here, yeah, is built on a standard WordPress plugin from 10 years ago called Amember Pro. I don't even know if it's got it down here, but this is built on Amember Pro. I know it because I've built a website on Amember Pro myself as well. Yeah, it's archaic. Technology is archaic. You know, it's like you got 80% off of that, but you can't see what it is until you go through the checkout process. It's just not as slick as all the other firms out there. They are dragging themselves backwards, unfortunately, with technology. But yeah, take 80% off of that. That's what you pay, next to nothing. But then you go to someone like Lucid, who are great. I'll put a link to Lucid in there. And this is the 35% off code if you want it. Lucid, basically, you can get an evaluation. Sorry, not an evaluation. A funded account with Lucid Direct, yeah, for that minus 35%. So it brings it down to less than $300. In my case, around about £200 for a fully funded, ready to go 2K account. Yeah, so I've got $2,000 to play with. $200 is 10% risk. Yeah, but I have to have a consistency rule of 20%, and I can only withdraw when I get over 2,000 in profit. And I know that, and I'm happy with that, and I'm comfortable with it. Yeah. So for me to get paid anything, when I get this account, I have to trade it up to 2K in profit, and then I can only withdraw anything over that 2K in profit after 8 days. And I have to have no more than each day that is profitable cannot be more than 20% of that total amount. So when I get to 4K, my biggest day cannot be more than $800. Absolutely comfortable with that. They let you have 5 of those. $250,000. It's not. It's 10 grand. But it's no money, is it? Look at someone like FTMO. Yeah, if you want a 50K account with FTMO, you're going to be a lot more money than that. And you've got to go through an evaluation. Yeah, if you want like 87 minus the discount, right? Call it $60, 45 quid in UK money. It's nothing, absolutely nothing. But Apex, the trouble with them is they give you 80% off. Yeah, so you're getting it for $20 or something. They can't make enough money to pay the people. And then it falls down, unfortunately. Anyway, I was going, wasn't I? Just about to stop out the Dow on in profit. Right, so that's me done for today. Back on Friday for members streams. So if you're around on Friday, members, we will be covering something. Haven't pinpointed what we're going to do on Friday yet, but we've got member stream at 9 o'clock on Friday. Then we got the New York session Friday afternoon, and then Q&A session with members at 3:30 on Friday afternoon after the New York session. So back Friday afternoon if you're coming back onto YouTube. And anything else you need, let me know. I'll be in Discord or Telegram. Other than that, have a good day, and I will see you next time.